Hey, probably not a lot to say today. Got very little done yesterday, frustratingly. I only added a little bit to the article. I didn't even get that finished. It so often happens when I feel like I'm getting into I start writing easily with an idea, and I start and then I start getting into the sort of the nuance and the details of it. So I get bogged down in checking my thing, checking what I say, finding links, then going searching for links ends up distracting me, and I get bogged down in the weeds, and then the whole thing grinds to a halt as I just sort of I don't know, over distract myself. So I've got to just push through that. And so because I was trying to get that finished before I got to work on this, I got nothing done on this, and then that's probably doesn't need to be there. And then crypto's had a crazy day. I did well on the long, then I changed it to a short, and I did well on the short until just a few hours after it did this crazy reversion, which ended all my shorts being positive, and then overnight I got stopped out of some of them, which actually overextend. Like for some reason, Bitfinex didn't complete my sell orders on my shorts before hitting my stop loss, so my stop loss bought back more than I had sold. Even though my maths was right, I had sold 100 and my stop loss was for 99. One of the sell orders only partially completed for some reason, and that's super irritating because it should complete in order before it gets to the order above it. So Bitfinex screwed me over, that platform being unreliable, and cashed out on my positions at something of a loss, not a huge amount of money, but still hundreds. So it's irritating. And now, the other thing I noticed, and part of the reason I spent so much time focusing on the trading yesterday, was because I realized too often I had sort of noticed it, but hadn't really made it core to my awareness of using this market order book tool, that frequently, including right now, see how you got the grid lines? Well, if you look at it closely, you'll notice that this is in increments of $50 and this one's in increments of $100. I have no idea why they have changed the axes on each of them, but it creates a distorted perception. Like they look like they're sort of similar, but when you pay attention, it's like $1, 2, 3, 4, 5, 6, $700 to get up to 28.5 thousand bitcoins, and this one is $1, 2, 3, $400 to get up to 32. So they look similar, but they're out by $1, 2, 3, say $400 up to get to sort of the plateau where it starts to really level off. And this one's $400 down to get to a much higher plateau. And actually, I don't even know if it's a plateau because it looks like, because I don't actually know that down below 7,600, 6,900, it gets really gets even steeper. It's like a lot of people putting orders down there. So this, I don't know why having different axes, it just doesn't show you a clean view. So the simple solution is to always use relative, so that you're always looking at the same percentage movements. And so when you do that, it's quite clear that the left side is, there's a lot more coins being bought than coins being sold. And of course, since I'm using relative, I may as well go all, because all currencies affect the market, not just US dollars. So now that I know that flaw is there, I'll stick to the relative view all the time. But that's kind of annoying, because if you do the maths, 4% of 7,700, 1% $77, so 280 plus 28, so it's $300. I can only see $300 either side. I can't zoom out any more on that. But if I go to, as I showed before, 1, 2, 3, 4, 5, 6, 7, $700, $800. I I wish I could see a wider perspective of it, even if in reality it's just like the closest few $100, a few $100 sort of tell you what's immediately going to happen. But if I could see $1,000 down to 6,700 on this side, I expect it would sort of come up and then have some massive volume down at that level, because that's a floor that it's hit a few times, that $6,500 to $7,000 range. And so the ability to sort of know that that's there would be very helpful. Anyway, that's really feedback for the creator of this, and I could send a request for it. But anyway, until for now, 4% is my vision of the lay of the land. That's what I use. And so, anyway, so because of realizing that and looking at it again, I realized down here that though I'd opened a short here and got lucky that I'd made this drop, I started to realize that actually there's a lot more buying pressure. So even up where we are now, you can see that there's sort of like vaguely. So you can now follow that intersection is. That cross is about equal to that cross. We go back to this cross, right on the top of the thing, there's an intersection there, there's an intersection there. So for the first 1%, there's very similar profiles. For the next 1%, it's a little bit in, this one's a bit more in, so this one's a bit steeper, from 1 to 1.5%. You sort of get a feel for how much resistance there is going up or down. And so even as high as we are, there's still a little bit more resistance going down from here than there is going up. Only subtle, the 1% makes, looking at this, 1% $70, so 7,650 to 7,780. That's a 1% range, 1% up, 1% down. So anywhere between that is entirely within this area. So it's less to do with these movements and more to do with its ability to cross 1, 2, go down 2%, which would take us down, a big drop down or a big jump up. So going up here, and that's really what it is trying to figure out. It's like, when is it going to make? How hard is it going to be for it to get up a couple of percent or a couple of percent down? And so looking at this, the down's got more resistance. And so even though we're up so high, the down's got more resistance up here. When we moved down, it was even more resistance to moving down. Now of course, you got to pay attention once it goes down there and it does this for a little bit, then more sell orders will come in, and so the longer it stays, the more chance it has of changing its profile. But in the immediate term, this gives me some indication of which direction I have more confidence in. Now, so yesterday I realized I was sort of in the wrong position probably, and then sure enough it happened, and I hadn't acted fast enough, so I sort of lost that position, and then last night this move started happening, and I don't know, I didn't fix my position very well, so I sort of lost out. I don't know why, it's my own stupidity. But now I have, even though we're up here, I'm looking at this and I'm like, I think we're still going up. There's still more buy pressure below than sell pressure above, and the overall trend, zooming out, is actually ignoring these big spikes and dumps and the confusion which is always present. The trend now is up. Like, that looks like a pretty solid bottom. I know when we were here, there was a big buy wall below it, and it took a lot of pressure to get down below it, and a lot of pressure, but it just got steeper and steeper and steeper the more we got down, until eventually it's like, no, not going down. And so we started the up. Now I started shorting because I thought this was a pretty weak up movement, and it was. I think the market's genuinely torn and doesn't know. There is like massive friction. Lots of people are super confident that we are still in the bull market and we're still heading down, and they've got good arguments. But lots of people are hopeful that we're not. Lots of people believe that we're not. And if you go out to the day, like there's a pretty good argument for this trend line being supported. This was potentially the bottom of the correction. And so now we're just confirming that, and there's a hypothesis. No longer hold. We're just confirming that, and then if so that there could be another sort of, a lot of people are drawing another line along there. If it breaks out above that, if we get above 9,000, this line here, maybe that'll be enough of a confirmation that yeah, this really was the bottom. So Tone Vays focuses on like this is the low, the lowest low, but this is the lowest close. So he sort of still looks at this as like a lower low. But by other metrics, it's a higher low, and this is definitely a higher low. Even the close is higher than that one. But yes, so like there's really good arguments for both as far as I'm concerned, and I really don't know. The main reason I continue to really listen to what Tone Vays says is because I'm so long on this. I have most of my money is in crypto. So if it does continue to go down, if we do drop to what, 4,900 to the $5,000 mark, or the $3,000 mark, then I am in a very financially precarious position. So I would rather trade as a bear expecting the market to crash than trade as a bull. Because if the market goes up, I do well. If the market goes down and I'm trading like the market's going to go up, then I lose twice. So I should always trade with a preference towards bearish trades. Because if I trade as a bear and the market goes down, it's not like I am coming out neutral. Even if all of my net holdings, my equity loses value, while my shorts gain value, they don't neutralize each other. They kind of do, in the short term. But let's say it drops down to $3,000 or something like that, and I had some 2 or 3 really strong shorts on. So the whole way down, my equity is getting smaller, my balance is getting smaller, and it's terrifying for my holdings. But my short positions are gaining more and more and more profits. I get down to the bottom, close my short positions, and then all of those profits get put into my balance as USDT, which adds to my equity so I don't get liquidated. And then, inevitably, I believe, and I have very good reasons for believing, it will recover. Like, the markets have seen this play out many, many times. Like, this is a logarithmic scale. And this is something I did ages ago, and I did it. Roughly the right spot. Tone Vays is saying we are currently here, and so that has progressed from when I originally made this. Anyway, yeah, the markets have crashed and crashed and crashed and recovered and crashed and recovered and crashed and recovered and crashed and recovered so many times. Like this, that's the status quo of cryptos. So there's nothing new about this. And even if we go all the way down to 3,000, even if we go all the way down to 1,000, there's nothing particularly. Like 1,000 would be pushing it. That would probably be the biggest crash of all time, which seems so unlikely given how much the ecosystem has changed, how much more attention there is to it, and how many more people are invested in it, and how many more people are watching it, waiting for the opportunity to get in. And you do not wait for $1,000 to get in because you do not believe for a second that it's going to get that low. And even if you did, then you'd buy in at 1,200, and you know that you'd do that, so you'd expect other people to do that. So it's like, well, maybe I better buy in 1,500, and that's why it'll never get that low. One of the reasons. Anyway, so my point of all that being that even if we crash all the way down to $3,000, I'd make great profits on the shorts. My balance would be look a shit house, but I'd close the shorts, take that profit, and then the balance would recover. So while the shorts are open, while it's going down, yeah, it would look neutral. But I'd close the shorts, the balance would recover, and I'd regain all those losses. So shorting is generally the better position for me to take. But equally, if the market is going up, opening up a nice long and then doubling my, effectively doubling the gains that I make on the way up would be great, because yeah, it's kind of nice having enough money that I don't need a job and that I can work on things like the Socratic Web, which has no financial model or no income and pays me nothing, and I've thrown who knows how many thousands of dollars at flights and accommodation and conferences and just general living expenses and working on it for free for years. That adds up, and I've got to find ways to survive. And I got lucky I got lucky in a number of ways. I got interested in the right things at the right time. I read the right book to make the decision to buy Bitcoin back at about 2015. Wait, yeah, it's 2015. June, out there, maybe there. Because I remember when I bought it, it was like I saw it, what I thought it was a triple bottom. So actually, if we go weekly, it'll be clearer. 1, 2, maybe that was the third one, or this was the third one. But like, I was just looking at it on xe.com, and I went, you know what? It's done this and it's done that. I don't think it's going any lower than that. And so I probably bought it about here or something like that. Not a lot, but I bought it because I read a book on the history of paper money and what the basis of money is and how it works, and felt like I understood the concept of money and currency and assets well enough from that reading, from a particular lens and a particular perspective that made me go, this makes sense, as much sense as money makes. Because the whole thing, it is absurd, it is make-believe, it is a mass hallucination, but it's a valuable one and a useful one. And this particular nonsense is just as good, if not better, than most of the alternatives out there, because of a number of its characteristics. And on that basis alone, and on the trend towards digitization, and on the trend towards globalization, Bitcoin just made sense. And so I bought it with rationale and reasons and the fortune of good timing. And I mean, I read that book, back here somewhere after this crash had begun, and watching it happen, I'm like, well, I'm not going to buy now. It's crashing. There was a big hack and there was a lot of fear and whatever. And so I did wait and just check the price of Bitcoin every now and then until I saw a bottom, like, I think we're at the bottom, and I bought. So, because I've had people criticize me, say, oh, you just got lucky. Like, yeah, I got lucky that I read the right book at the right time, had the right insights at the right time, waited until the time looked right, and was lucky that I wasn't wrong, because there's no reason why it couldn't have then gone down to a new low and ended up down here somewhere for a while. But I got lucky and I made the right moves. And so the gains that I've had on that have been enough to allow me to have enough capital to occasionally cover some of my living expenses while I continue to work on things for free. But it's not enough for me to retire. It's not enough for me to never worry about money again. So if we do get a repeat of this, if we are here and it goes down lower, hopefully I'll have shorted the market and made profit on the way down, and then hopefully I'll open longs at the bottom, and this next rise of from down here, what is it? From here it's 2,000. That percentage is wrong. It's 20x anyway. It'll be 2,000%. Down here it's a lot more, 10,000%. Like if I could get another one of those runs, and it may even be bigger than that, because I think each run has been bigger than the last. If I get another run like that, and I both have long positions open, and all of my money in coins, then I'll probably never have to worry about work again. And that would be nice, because although I say never have to worry about work again, to be very clear what I mean by that, never have to worry about working for money again. No one fucking goes, oh, I've got money, I'm just going to do nothing and not think of anyone and just play computer games and smoke weed all day. No one does that. It's bullshit. It's what people do when they have to work. They do that stuff because of the frustration of being told what to do and being controlled and manipulated and trodden down by society and the way that we function and destroy values and connections and the things that make us human. It's a conservative bullshit myth. And while I'm here on the topic, fuck, I'm sick of conservatives at the moment. Really fucking sick of them. Sick of small-minded, bigoted morons that really lack empathy with the world and what's going on and are easily manipulated by fucking mainstream media polarizing bullshit. And I know in saying that it sounds like I'm being polarized against conservatives. I guess I have to be aware of the fact that there's conservatives that aren't like that, and that's not what I'm talking about. So it's like broad terms are broader than you may mean them. But too many Facebook interactions with people that are just, I'm sick of having them and I don't want to do it anymore. So I should just avoid Facebook. Look at that line. It's such a good line. It's there, to there, to there. They're not quiet. They're not quiet. I hope it holds, because that's a good line. Tone Vays thinks that every time it touches it gets weaker. So it didn't touch there, did it? Didn't touch there. If I've drawn it correctly. Anyway, so hopefully this is just a short correction and it goes up to $200,000 in the next 6 months, and then everything will be fine with the world, and I'll be ready to I don't know, hopefully I'll stop wasting so much time looking at it. It's such a waste of time. What's happening? Has anything changed? Why did I get a dunk? Just WhatsApp. Okie dokie. Okay, so this is a rambly rant full of probably overly personal details and what's it called? Sort of inflammatory content right at the end. So hopefully this is another video that no one watches. Ciao.